off in the right foot, but we're not, because the SPOOs are up some 26 handles this morning. Based on what? I have absolutely no idea, the jobless claims that came out, that was right about here. No one cared. There was an ECB announcement that actually did cause us to rally a little bit. I have absolutely no idea why. We're going to leave rates massively unchanged. Yeah, we should buy that. Then we should buy a little bit more of the jobless claims, and yeah, there we are. I'm getting wildly sarcastic about some of the moves you're seeing on the screen, because when it comes down to it, it really is like three stocks. I mean, three stocks and three stocks alone. Obviously, Nvidia being the primary one of it, but I was emailing back and forth with a client yesterday, and I was like, look, if you add it up, he's like, no, it's Caterpillar, it's this, it's that. I go, if you add it up, every one of the stocks you just mentioned, it doesn't equal, but it was like 2/3 of the market cap of like Nvidia. It's that crazy right now. So Nvidia is bid out of the gate by about $15. Tesla's actually taken a hit once again. I mean, nobody likes me. What is really moving the markets today? So the financials do have a bid under them. Now, there was some big news yesterday regarding financials. And this had to deal with capital requirements, internal capital requirements. That's your bid under the marketplace. The energy sector this morning, this was a driver yesterday. It's massively unchanged. The advanced decline line is going to be rather strong though this morning. And by the way, if you look at this, it's perfect. It's perfect to show this because some stuff is green. It's Nvidia. Some stuff no, it's not Apple, because that was down, and no, it's not Microsoft, that was down, and even Broadcom yesterday was basically like flat. It was Nvidia. I mean, that's your whole market right now. We're in all kinds of chaos. Even Google was down yesterday. Nevertheless, we're going to come into the cash open here. Positive advanced decline line. It's Nvidia's world. We're just all living in it at this point in time. Bonds also have a bid under them. We'll talk quite a bit about bonds this morning. Speaking of bonds, there's just massive volume in bonds. Almost 200,000 contracts in the pre-market. It's about as extreme as it gets. There's also quite a bit of volume inside of the S&Ps, but the roll is starting today. Roll them. Anyway, with that, let's come into today's cash open. Look, we're already at this point at and slightly above the expected move for the day. I knew there would be quite a bit of movement into this. I don't expect this thing is just going to explode higher though this morning. I mean, you're already there. And when I say you're already there, you're already at the upper edge of the daily expected move. So sorry for my premature horn. Anyway, look at the advanced decline line. Totally correlated. But the reality, there's not a lot moving. I mean, there's, Tesla's down, yeah, and Apple's flat, but let's say there's not a lot of moving. Microsoft today is actually catching a little bit of a bid. Again, $28 is exactly, wow, positive tick, big positive ticks. $28 is exactly the edge of the daily expected move. So bear with me here for a second. All right, with that, I wanted just to detail the S&Ps again. On the daily, they've hit the expected move. However, and I don't want to confuse anyone, then the daily, the expected move. On the week, we're actually clawing back to unchanged. And if you look at the QQQ, the Nasdaq 100, where are we? We're halfway home, okay? Back to even, meaning like, in the expected move, we're cracked outside of it. So the market is still technically flat on the week as of right now. Market being S&Ps. The S&Ps are literally unchanged on the week, which, so everybody's aware, this does kind of raise the stakes between today and tomorrow for significant market movement. Again, cannot Cannot stress enough though. It's become like a one stock market. If Nvidia does back off a little bit, forget it. The S&Ps, the Nasdaq are chicken's done. There is, of course, and something I've been mentioning. I mentioned it yesterday. I mentioned it on last night's video. It has occurred to me that we could actually see Nvidia start selling off and a rotation back towards Apple, a rotation, and you are actually seeing Nvidia take a little bit of a hit this morning. So watch that Nasdaq, right? You can see a rotation out of Nvidia, and if it does play this way, it's clearly going to be a buy into Apple. It would clearly be a buy into Google, stuff that's actually been hit. That is a trade. Actually, a buddy of mine at a trading firm is discussing exactly that, which is like this counter rotation where everybody's just done with Nvidia and they start to buy Apple again. And one of the reasons they're talking about it is that's the kind of crap they look at, for rotations. They're not so much into the stock side of things. Obviously, they're trading the derivatives around it. Nevertheless, be a little concerned for that one because it could cause some pretty extreme volatility in the overall marketplace. All right, onward here. All right, need coffee, need coffee. All right, already losing my voice here, and it's only 3 minutes into the trading session. Anyway, let's just a quick glance here. Some of the order flow. There's nothing going on right side in Nvidia. There's nothing. There's no size in here. So it's 50,000 contracts have traded, but again, it's Nvidia, and there's nothing leaning on one side or the other, meaning that there's not a lot of call buyers, no put buyers, no call sellers. There's nothing really going on in here. And I am rather surprised to see, though, such significant movement so early on in here. Nevertheless, as I was saying a few moments ago, rotations plausible. You can see Microsoft, and I want to bring up Microsoft because clearly it's the player in the room as well in terms of market cap. So we're all well and clear. Microsoft this week is well outside its expected move, and it's notable simply because I don't think I could have fathomed that the market, which is the S&Ps, would be flat on a week where your largest market cap, Microsoft, is taking this substantial of a hit. Moreover, like Apple is actually through 2 standard deviation territory, clean on its way to, I mean, literally, you're in somewhere between 2 and 3 standard deviation territory. If you had said this to me, and this is one of the reasons, like, market's pretty fascinating no matter how long you've been in this business. But one of the things that I just stress in here is, could you have imagined even a few months ago a market where Apple was taking this substantial of a hit, Microsoft took a hit in the same week outside their expected moves? Hold, we're not done just yet. Taking a look, Google is actually down. Okay, Tesla getting decimated on the week. I mean, holy crap, it's also almost in 2 to 3 sigma territory here. And yet the Nasdaq, okay, and the Nasdaq, don't get me wrong, it's down on the week, but flying right now, just absolutely flying. And you had told me that even 4 or 5 weeks ago, I probably would have laughed. There's no way. But every ounce in terms of market cap that's being lost in Microsoft and Apple and Google is being picked up specifically by Nvidia. It's just you're just transferring market cap, okay, from one product to another and substantiating a market on that footing, which is, I mean, it's dangerous because will that market cap eventually dissipate out of Nvidia, or is it going to rotate back into those underlyings? And that's the right question to ask, because markets like this, okay, from where I sit, this is not a healthy move for the markets. Okay, yeah, it doesn't matter whether you're on the right side or the wrong side of this. Products like Nvidia, this is where I often say, look, this beats up everybody, long or short. And the ones that actually do extraordinarily well in here, though, market making side of the business has to love this. You have a stock that's going up with volatility actually going up, which is, you know, a little bit of insanity, if you will. But look at the IV rank. Just to make a quick point, in fact, I'm actually going to pull up a standard volatility study in here. We're just going to go right to implied volatility. Point to be not taken lightly. Go over here and get rid of the volume. And this is, again, something I would not take lightly in here. All right. Has everything to do with, bear with me for a second. This has everything to do, okay, with earnings. Okay, you can see this is earnings implied volatility, and just a massive rally in terms of not only the stock but the volatility. Okay, it's almost like disconcerting to see volatility move up this much with the marketplace rallying. You can see previous rallies, okay, in here, and you can see again this rally from the beginning of the year was done on increased volatility, but that had far more to do. Again, that rally had far more to do with earnings coming than it did anything otherwise. So again, I'm just pointing out, here's a previous earnings announcement. Look at the peak of volatility, basically where we're at. You know, another earnings announcement, but again, with that massive shift up in volatility, okay, it's not just unusual, it's the skew in here is completely distorted to the point where, as I've been mentioning in the past, you know, about 10 days, I've been looking at this, and you have to be a little cautious in here. The skew is so massive that eventually, you know, it doesn't make it worthwhile for trade to be able to buy any of these options, because look how significant, like the that's the average implied volatility, but the at the money implied vol is 50%. As you go anywhere out of the money, I mean, this is flying. This, and then the put skew is basically flat, right? Where the cost of puts, I mean, it's just basically nobody wants them. The supply and demand impact in here is nothing less than astounding. And again, the reason we're looking at this is not necessarily rooted in, hey, I'm looking for a trade right now. It's looking at a marketplace that is incredibly distorted from a supply and demand dynamic. Okay, it has to normalize. You know, it's already gone on. Like if you were sitting there, you know, you kind of look at this, you have to think to yourself, you got to be on borrowed time, right? And from this point forward, you need to be able to mark time in here. That's what I said about 10 trading sessions. I've been talking about, like, look, this thing, it's got to be on borrowed time. There's no way to substantiate skew that is this extreme for any more than maybe a few trading sessions. And quite frankly, it's already exceeded, you know, some of the most wild expectations in that. And again, if you're not familiar with skew, I think the best way to explain it is, look, you have a $905 product. So let's go up to, oh, I don't know, like the 950s. These are $45 out of the money, right? And then go approximately $45 out of the money on the put side of things, like right to here. Okay, what I'm trying to show you is the puts, which are in this case the 860 puts. They're trading for basically $9. The equidistant calls are trading for about 13. That skew, okay, it's just incredible. I mean, it's incredible where, again, calls are trading for not just a little bit more, but substantial, like just substantially more. And as you go further out of the money, let's go like even almost $100, or here's like $95 out of the money. Okay, the 1,000 calls. And again, we're only 8 days out. Only 8 days out. They're trading for $6. Okay. Whereas if you were to look, also $100 out of the money on the put side of things, okay, which is what, you know, down here like 905-ish, right? Okay, sorry, 905 is where we're trading. Like 800, 805, they're trading for $2. So the puts are trading for less than half. Okay, people, this will not stand. The shot in here, and now I am going to get into a trade idea. The shot in here is you go in here and you buy a put for like 250, 8 days out, and just close your eyes for $250. One day it might actually be worth. You do that 2-3 weeks in a row. Okay, I think you'll actually hit, and one day it'll be worth that $250. Could be easily worth a few thousand, and it's a very controlled, very measured shot. Okay, not even using a spread in this case, but you can go all the way out in terms of delta. In this case, you can go out and buy like an extraordinarily low delta, okay, and you're just swinging for the fences with this. And that's what's so wild about it. And again, this is where everybody looks at a product and says, no, it's never going to back off. When it's at 1,000, when it's at 1,200, okay, it has nothing to do with any fundamentals. So at this point, you're in the hands of option traders and skew. So, and I'm with all due respect, okay, you need to stop listening, all right, to what people think about share price and start paying attention to what in this case is, well, some madness in terms of skew. Okay, the skew is, in my opinion, if the stock would have to calm down here and flatten out, the implied vol can actually pull back. That's the only way the stock continues to go parabolic. What happens in a structure like this is the skew basically implodes upon itself. Like the skew is so heavy in here that it's going to implode the desire for anybody to want to trade these options. That is exactly what you're going to see. And it's going to be fast. It's going to be swift. The skew implodes. Stock actually falls and be a worthwhile trade. But again, the kind of thing that you're doing out here is buy a way out of the money put. You may have to do it 2-3 weeks in a row. You cannot do it though when the stock starts to fall. It'll be too late already. So the second they actually feel like skew is going to implode, you can almost see there's actually, interestingly enough, some of the skew is even changing in here as we're speaking, right? But the second that the skew starts to implode, when I say skew starts to implode, there's a price in here, okay, where basically it's just not worth buying calls. Everybody's like, this is the dumbest thing I've ever seen. The out of the money calls are trading for 60% implied volatility with 8 days to go. Would you want to pay $6 for the 1,000? You're like, of course, the stock could be worth 1,100. Well, the demand ceases at some price. Demand always ceases to exist. And then you just supply side dynamics. And that's where the skew actually implodes a little bit. Okay. And this is where I said this is probably about the 10th trading day I've mentioned, you're on borrowed time, and we've seen some really fast moves in here, but I'm spending so much time on this morning because that's your market right now. I mean, it's unequivocally, that's your whole market. That's the argument that I was getting into with a client. I'm like, you cannot mention, a Caterpillar's rallying and this is rallying. Okay. Nothing matters right now other, okay, than Nvidia. Now, granted, you can look at Supermicrocomputer. It's an afterthought. Nvidia's market cap is moving more than Supermicrocomputer is worth every day, right? And Meta definitely is playing a role in here, no question about it. Okay, but it's much more of a secondary role. If anything, Meta, if Nvidia goes, Meta is going with it, and that's the reality. The only one I would say is the odd stock out. Okay, the rally inside of Eli Lilly, it's impressive, but it has flattened out in the last couple of weeks. Impressive, yes, but non-existent in the last 3 weeks. So this has not been a contributing factor. Speaking of which, talking about contributing factors, S&P's coming in here a little bit. Look, I don't have a lot of preconceived notions about what this trading session is going to look like, but I, again, will state, okay, first of all, there's a big boy expected move today. We already hit the expected move. The expected move for today, according to SPX, let me just detail this. Dun, dun. So SPX plus or minus, that's 28 bucks. It's actually 28.51 to be specific. That's a 5. It's supposed to be a 5. That's the SPX expected move for today. It's already been hit. The SPX expected move for the week, 64 bucks. Why am I actually on the SPX right now? I'll tell you exactly why I'm the SPX. Just look here. Here. Okay. There's still a proverbial crap load of volatility packed in to the next 2 days of market moves. There's just a lot of volatility in here, and quite frankly, look, I know there's State of the Union. I know there's the look. That's nothing. No one cares at this point about any of the news coming out. What you got to care about at this point is markets see a whole lot of risk. Forget about what the risk is. Of course the volatility should be up. Jerome Powell's speaking today. Jerome Powell is not doing a speech though. Jerome Powell is just answering some questions. Anything crazy out of Powell probably came yesterday, especially with the capital requirements that he lowered for the banks. Okay, so that cat's out of the bag. You do have the jobs number tomorrow morning. There's no question that that's going to have an impact. But again, I think you got to push aside, okay, what you're thinking, and just know that volatility is inordinately high, okay, for a marketplace. Well, let's go back to the SPX. For a marketplace in the last 2 days that's actually rallied back. So again, this is exactly where we are on the week. And we know that right here, that's where the week started. That's going to carry the most gamma risk. So not only are you in a position of high volatility, you're in a position of higher volatility when the marketplace is also going to have an extreme amount of gamma risk. So just be well aware of that. This is, again, one of the situations. We start to roll up the hill, we could explode, hit the upper edge of the expected move. You start to roll back down the hill, explode, hit the lower edge of the expected move. Okay, I don't have a lot of preconceived notions, nor should you, about what this is going to look like even a few hours from now. Now, I know people get very, directionally oriented. Well, Don, we're already up today. We're up today to what? Exactly, unchanged on the week. Well, the only thing I see over here is we're at a high volatility, high gamma risk situation. I could care less where the S&Ps are trading right now. That's why you got to pay attention, though, to this marketplace. Probably today more than you have in previous trading sessions in the week, including Tuesday, which was a pretty big sell-off. Speaking of a fairly big sell-off, Apple continues to see, I'm just surprised that it's down at all, okay? That we haven't seen a rotation or an attempt to rotate back to it. If there is one thing that would be very bullish for today's trading session, it's a bid back under Apple. However, I just do not see, okay, a bid back under Apple without Nvidia taking a little bit of a hit, which I just can't see as being positive for the marketplace. So again, I'm definitely curious about that one. Let's also have a quick discussion regarding volatility. There's a excuse me. There is a reason that I keep mentioning how volatile things are right now. And that has everything to do with both VIX and vol futures. Okay. VIX, vol futures, your whole volatility structure. Look at it. Okay. Just don't even worry about what's on the screen. Who the hell cares? Look at volatility right now. This is 9-day VIX. Yeah, 9-day VIX. It's good for me. Okay. Why is 9-day VIX up throughout the course of the week? Now, granted, you had one day that there was what? There was sell side activity that was here. The volatility continues to climb. The ironic portion of this, 9-day volatility is higher right now than it was after the sell-off on Tuesday. Okay. Pay very careful attention to it. 3-month volatility, same damn thing. It's higher. Okay. VVIX is just mildly bid throughout the course of the week. Something is going on, though, in terms of volatility right now that I don't want to say I can't describe it. I sure as hell can describe it. Okay. There's more risk coming into a marketplace right now that is rallying. Okay. That categorically speaking, that has just meant movement is coming, right? Which clearly you're seeing movement right now, but you got to pay very careful attention, right, to things like volatility. How often do you see S&P's up 30 with volatility basically flat on a trading session. The answer is you typically don't. You saw it yesterday, and now you're seeing it again today. And well, I'm bothered by it. Okay, I'm all kinds of bothered by it. Yeah. So there's payrolls coming out tomorrow. Again, people are looking for like this big catalyst. So whatever the jobs numbers come out tomorrow, that's non-farm payrolls. That's tomorrow morning. In addition to it, again, you got State of the Union. I don't think anything's coming out of that. You have Jerome Powell speaking, and he's speaking all throughout the course of the day. There's no real surprises over here, right? So this is where, okay, he talks about yada, 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 and yada, yada, yada right off the best part. Okay. There are comments, though, okay, that come out of this that clearly can move markets. So there's umpteen different catalysts, and that's one of the reasons I'm telling you, back away from the idea of the catalyst. Okay, look, we all know who's speaking at what time. The volatility would already be priced in for that, but right now volatility remains bid, okay, with markets substantially higher, and that is incredibly unusual, okay, at this late portion of a week. Moreover, it's also, this kind of catches me off guard. It's pretty notable. There's a lot of contract size trading today. So we're doing and substantiating over 5,000 contracts a minute in here. Switching back over again to a couple of the big tech stocks, things that are moving today. So obviously Nvidia, still one of the movers on the screen. Microsoft, very mild rebound today of 0.5%. Okay, Google also a very mild rebound. By the way, Google and Microsoft looked almost identical on an intraday chart. Meta continues to soar a little bit higher here. I mean, right now, this marketplace it's Meta, it's Nvidia. Okay, even Tesla has regained a little bit of a bid in early trade, but Tesla is at this point, it's down, it's out, it's not even part. Like, again, there is no more Magnificent Seven. That's over. It's done with. I don't think you're even going to hear that terminology too much anymore, because even though Microsoft is still up 9% year-to-date basis, okay, Apple's down 9% year-to-date basis, Google's off by 4%, and Tesla's down by almost 30%. So the Magnificent Seven is no longer so much magnificent as it is. There are 4 stocks maybe left. And again, I keep bringing up Microsoft simply because this thing even got tagged a little bit yesterday. All right, this is, in my opinion, this is stock to watch. For signs. Again, is another major tech stock going to start to slip. Energy today still has a pretty continuous bid under it. There's no real surprises in here. I think the only surprise is energy. Okay, the energy complex is largely decoupled right now from oil. Oil's kind of flattened out over the last 3 to 4 weeks. The energy sector continues to actually bid a little bit higher. It's fine, done. The financials, okay, this is where I think a lot of capital is just being forced into right now, where you kind of feel like, does anybody really want to buy this? And yet they are. So there was a big announcement yesterday. That's actually the bid of the marketplace. There's a big announcement yesterday, okay, that dealt with how much capital is actually held in reserve. Okay, Jerome Powell basically, eased what were going to be some new restrictions on the banks. The marketplace loved it. This is, to me, honestly, surprising that we're not higher. Okay, yesterday, this was a major announcement in not an opinion. I mean, it's a major announcement. People like, over at JP Morgan, the Jamie Dimons of the world, absolutely had to love that announcement. Caught everybody off guard. For those of you that do not know this, the Fed, okay, has oversight to the banks, and in this case, it's a major change for the banks, specifically affecting like somebody like JP Morgan. Okay, be the biggest impact, and you can see their stock did obviously fly a little bit on that. Bank of America still smoking to the upside. Okay, Wells Fargo obviously have a position in here, cracked outside the upper edge of the expected move. Okay, so why are you seeing something like XLF being held back, right? XLF. It has a lot to do with Berkshire. Berkshire Hathaway is not performing, and Berkshire Hathaway is actually your number one constituent to the XLF. Okay? A lot of people aren't aware of that, but the financials, okay, the financial ETF has a crap load of Berkshire Hathaway in there. It's the biggest. It's the biggest and the baddest in the XLF, and its performance or lack thereof, okay, is what's actually causing the XLF to kind of drag a little bit, where some of the banks themselves are actually rallying. You know, I hate some of the ETFs because people are not aware of really what's in them. Other aspect that's worth mentioning. So we talked for a brief moment about like volatility, and volatility is just up. And look, I don't have a lot of description of why volatility is up. When volatility is kind of up with the marketplace up, it's definitely, well, a heads up. The other thing that really is kind of resonating with me is bonds have been incredibly bid throughout the course of the last 2 trading weeks. If you look at this from auto expected moves as well, like look how substantial. That's a crappy job over here. Go to TLT. All right, TLT sometimes just charts better, right? Look at TLT and how substantial the move up has actually been. Huge hit 3 weeks ago, last week, obviously this week outside the expected move. Okay, this is a really big move though, up inside of the bond market, just taking interest rates a little bit lower. The question right now is the movement, and the only reason I'm bringing this up is the movement into the bond market somewhat defensive. And you know, I wouldn't usually give this 2 thoughts, but the concern right now is you're seeing the same move in gold. I mean, again, I don't think crypto is all that critical, but crypto is also flying right now. Okay, it does look, okay, defensive, and the reason I'm saying it looks defensive is bonds, by the way, have just completely flattened out on the day. But you have bonds, okay, that are categorically moving higher. You have gold that's moving considerably higher, breaking out all-time highs in here. Okay. But then you couple that with implied volatility being higher with the marketplace higher, and I think it is a little bit cautious at that point. Okay. Everything you see on your screen right now, though, it's unusual. There's a lot of unusual things going on, and it's pretty fast, fluid situation. I'll let you guys know throughout the course of today if I see anything that really changes. This is very similar to the price action we saw yesterday. Okay, you know, obviously we had some volatility emerge earlier in the week. It was a brief and fleeting moment of volatility. Nevertheless, looking for what's this marketplace going to hold next. The rally back over here is of no surprise. Okay, the big surprise though comes on a rally back with other asset classes looking like they're pricing in a considerable amount of risk. So this is going to be, I think, a pretty tentative situation between today and tomorrow. That marketplace being up 33 handles right now. Okay, I'm going to close there again. Lots of gamma risk that we're sitting on, big expected moves, and you know the interesting aspect, the SPX. Okay, the SPX today had a $28 expected move. Clearly, it's already spliced through that. Okay, did that yesterday, did that the day before. You're in 3 consecutive days of the daily expected moves being shattered. So we are actually seeing a lot of movement play out, a lot of price action in here. Somebody was talking about buying a straddle earlier. Okay, that would have had to been over and done with at this point. But again, a lot of volatility playing out in the marketplace that, you know, everybody's like, it's unchanged in the week. Okay, keep your head in the game over here. There's some movement going to be priced into this for the remainder of the trading session. Ticks are still positive, minimally so. The advanced decline lines come in a little bit, but you know, frankly, the only concern today would be something like Nvidia. I mean, it's not just leading the market; it is the market. You can't point to anything else, okay, that's even playing a role other than Meta, which is neck and neck pretty much with Nvidia. I would say that the energy sector has a bid, and that's helping the S&Ps, but to a much lesser extent. With that, you know, I do have to turn it over to Tony Rago. It is Thursday. He's going to come in here and scalp some Nasdaq futures with you. I'm going to be here the entire trading session. I want to make sure that any big moves over here, trade executions, I'll let you guys know as soon as I know. Again, I'm going to let this marketplace kind of open up Jerome Powell is kicking off some of his more of testimony, today. But again, as I said, I don't think that's going to be a market mover. The next market movers come tonight and tomorrow morning. Stay tuned. Tony Rago is coming on right now.